Hello, everyone, and welcome to our July webinar. It is noon on the dot. Looks like we have just a few more people who signed up, so if we can stay patient for just a couple of more minutes, I'm going to give them the opportunity to join us, and I will get started in just 2 minutes. So, thank you. All right, looks like we are just about a full house right now, so I'm going to go ahead and get started our July webinar on how will the upcoming election impact financial markets. So I'm Dave Clayman, CEO and Wealth Advisor here at 12 Points. There's a whole lot of initials after my name there, but we'll move past those for those that don't know me. So I thought I'd get started with what are the current market fundamentals. So the markets have certainly rebounded since where we were in March, so this is a much more pleasant time to be talking to all of you than I was back in March on our webinar. But has the economy rebounded? So the S&P, honestly, amazingly to me, is now positive for the year, and the NASDAQ is up over 10%. That's all while GDP is likely to be negative 5 to 6% for 2020. And quarter two earnings, so the earnings that are coming out now, are estimated to be down 44% year over year. It's pretty astounding numbers. We just recorded the second quarter for market returns was the fifth best quarter in the last 25 years in the time when we are likely, hasn't been officially determined yet, but we are likely to report the worst single quarter of GDP in U.S. history in terms of drop, obviously not total production, but in terms of drop. So those are pretty astounding divergence there. And what we've got right now is 17 states are actually reversing their reopening. So is this sustainable? And one of the reasons I ask is this morning we received the print of weekly initial jobless claims. And for the first time in 19 weeks, we had a rise in initial jobless claims. 1.4 million people filed new claims for unemployment last week. So to give you some perspective on that, yes, it's a lot better than when it was 3 and 4 million, and I believe we even hit 6 back in March and April. But before the crisis, we were down in the 200,000, 190,000 level. And for clients I was talking to who were looking to see where we were going and how the economy was trending without the pandemic, I said to them that jobless claims below 250,000 was kind of noise to me. So if you think about it, even 19 weeks into this, we're sitting at 1.4 million new people claiming unemployment this last week. And here is a little picture of what those fundamentals look like. So this is earnings all the way back to 1910. Now it's on a log scale, but it shows you the price of the market and the earnings per share. Look at that dramatic drop-off there here in 2020. So the key for markets now is not just going to be how the economy does. I've been reminded many times over my career that the market is not the economy, but they do generally rhyme. So the key for markets will be how do earnings rebound from the 2020 fall. It's hard to judge right at the moment, as starting in with Q1 earnings, companies started to withdraw their guidance. So generally, a company will come out and say, okay, we did 58 cents for this quarter. We expect to do $2.50 for the year. And then analysts can work either side of that and say, oh, we think that Steve Jobs of Apple was always famous for sandbagging the quarter, as they called it. He would always say, "Oh, we're only going to earn $5 next quarter. It's going to be terrible." And everyone knew Apple was really going to earn like $7. So everyone knew Steve Jobs was sandbagging, but it would give the analysts some guidance, and doing their channel checks and looking into things, they could come up with an idea of where are we likely to lie, higher or lower than what the projection is. And now there's no guidance whatsoever. So companies have come out and said, we don't know, and we're not going to tell you. So it leaves analysts a little bit in the dark. But 2019, the S&P 500 companies did $169 in earnings. The range for 2021 right now among street analysts is anywhere from $115 to $175. So in other words, 2 years later, we will either be slightly up in terms of like 0.5% in earnings, or we'll be at 1/3 down. That's a pretty wide range, especially when you think markets are generally priced in multiples on that number. So if you were to say the market's worth 20 times earnings, well, if you had $175 in earnings, you would say the S&P 500 should trade at 3,500. If you had only $115 in earnings, you would say the market should trade at 2,300. It's a really wide range that you could drive a truck through. So that's going to be the key for how the markets move forward. How have markets historically done in relation to elections? Well, here you can see these are election year returns all the way back to 1952, and you can see every year except 2000 and 2008 were good years. What happened the year following? Well, that's a more mixed review. Recently, 09, 13, and 17, we had big up years, but you can see there was a big period of time during the late 60s and early 70s into 1981 where we had negative returns the first year of every president. So, the historical record is a little bit mixed. Here's a little bit more. We can see the worst year for returns really for presidents has been their year 2. This shows you FDR, Eisenhower, Nixon, Reagan, 2 Bushes, Clinton, Obama, and Trump. Year 3 was the best year. So that gives you, and last year we had a great year for returns. So year 3 historically the best of a presidential cycle. Year 4 the second best. Years 1 and 2 tend to be mixed. So that's coming up as well. Now, of course, we don't know who's going to win. So thinking about how does one position their portfolio depending on what's coming up. So what do we have here? So let's lay this out. A Republican agenda. Republicans historically have been seen as fiscally conservative, but that's definitely not so in the current administration. And I'll give a little demonstration of that afterwards. But deficits have risen more in this administration. Tax rates would be unlikely to rise under a Republican agenda. Government regulation would be likely to continue to soften, but potential monopolies unfriendly to the administration could be targeted. What do I mean by that? Well, obviously, companies lobby to curry favor with administrations. All companies do it, both sides. And you might have, but big tech is one that could particularly be in the sights of anyone looking to increase regulation. So whether you're talking about a Google domination or a Microsoft or an Amazon, what are they doing? Where's their competition? How is that working? So they could be targeted as monopolies. And when I talk about someone who's unfriendly to the administration, so again, not that I'm criticizing the company specifically, but as an example, Amazon, really they've taken over retail, as we know. They've basically put a lot of people out of business, become a great service to the country. But Jeff Bezos owns the Washington Post, and they have historically been in a newspaper which is critical of the current administration, right, wrong, or sideways, that poses some risks to the company. Defense will likely be emphasized under a Republican administration. You're likely to see nationalization over globalization. So one of the reasons that markets have done so well primarily over the last 40 years has been expanding global cooperation, more trade agreements, more cheaper labor. All of these things have worked in favor of improving corporate margins, improving earnings, and therefore improving markets. Right now, obviously, the current agenda was make America great again. argue whether that happened or not, but the focus definitely is bringing things home and again, nationalization, less cooperation with global partners. And frankly, the pandemic may only accelerate that process. So both from a concern over supply chains with what we saw when China and Wuhan originally shut down and the problems that developed there, as well as the finger pointing and what's going on. I mean, even now we see restrictions on travel. The Bahamas just shut the United States out of being able to travel there. So looking at all these things. And then the China Cold War may expand in earnest if re-election is no longer a concern. So many of you may remember that last year we were waiting almost with bated breath every day. Were we going to fight with China? Were we going to be friendly with China? Was there going to be a deal with China? Was there not going to be a deal with China? Trade deal, no trade deal. And we got a phase 1 trade deal late last year. And phase 2 was rumored to be coming, and it's kind of fallen by the wayside, and there's even been some talk about the loss of faith and trust and everything going on between the two countries. It's probably been tamped down a little bit by wanting to get reelected, but if the reelection is no longer a concern, it's a strong possibility that would become a front page issue again, and we'd go back to our trade war with China. What would a Democratic agenda look like? First and foremost, they'd probably look to reverse the 2018 Tax Cuts and Job Act. So the corporate tax cuts, the personal tax cuts, all those things that came through in late 18 that were such a positive for the market. Whether it was a positive for the economy, again, this is not a policy discussion, but it was a positive for the market. And those would likely be reversed and look to increase tax brackets and tax rates. Increased government scrutiny and regulations. So for better or worse, the Republicans have loosened a lot of regulations. Certainly what's going on with the FDA and trying to fast track things through with vaccines, that's generally been a focus of the Republican administration anyway, but even more so with the pandemic. Looking at regulation of oil pipelines, all those things would likely increase. And again, potential monopolies could be targeted even by the Democrats. So that's something that I think is a universal issue. Would we experiment with universal basic income? So obviously we just had the $600 additional unemployment payments made by the federal government. And there's some lobbying that perhaps every American should be making at least X number of dollars. And it's a concept of universal basic income. So would that come to pass? Not sure, but Stockton, California has actually implemented it there. They are issuing a check to every resident of Stockton, California, and other California counties are already talking about expanding that. So that is something that I wouldn't be surprised to see come about towards the end, or at least be talked about strongly towards the end of a first term of a Democratic agenda. Reversing the increases in the estate tax exemption. So this is something that's very, very important in the world of wealth planning, less so in the markets, obviously, but if we're talking about someone who might have significant wealth, right now you can pass along $11 million individually, $22 million as a couple, to without estate tax. That's up significantly. When I first started in the business, it was $3.5 million personally. So to look at those numbers and think that that might be strongly reversed, well, when you're looking at a federal deficit, 24, 25, approaching 30 trillion, debt, not deficit, let's not get there, debt of anywhere between 25 and 30 trillion, we have to start thinking of ways to pay that back in theory. So increasing the estate tax or reducing the exemption from it is a likely scenario under a Democratic administration, and something people should be starting to think about when they think about their own personal estate planning. Green investing initiatives are very likely going to be out there. For example, Tesla reported their earnings last night. More money was made in selling their regulatory tax credits than in actually selling cars. So those are due to expire, though. I wonder if part of the recent run and speculation in Tesla stock has been related to the fact that those credits might be extended if, Senator Biden is currently in the lead if he were to win the presidential election. And then more global cooperation. So I do think we will be more friendly to other countries under a Democratic agenda than under a Republican agenda. What does a clean sweep look like versus the balanced government? So the Senate could flip to a Democratic majority. So if Senator Biden, assuming he's the nominee and eventual winner, if he were to win the election, that would give the House and the presidency to the Democrats. If they could flip the Senate as well, you'd have a clean sweep, as they would call it. The Republican Party is defending 8 of the 10 closest Trump states from 2016. So that's where the potential flip comes from. And since 1992, incumbent senators win only 70% of their races if their presidential candidate loses their state. That number is 97% win if their president wins their state. So, in other words, if President Trump were to carry the election, it is 97% likelihood that his senators would win their states as well. If President Trump were to lose the election, it makes it only 70% likely that those incumbent senators win their races. Historically, markets actually perform best when power is balanced instead of consolidated. So markets prefer less regulation, less things getting done, smaller government. When you have cooperation amongst all parties, more things get passed, or through all, more cooperation through all bodies of the Congress and the president. So if you look at that, that tends to enact more laws, more regulations. Markets tend to look poorly on that. So historically, the S&P annual average return under a balanced government is actually 5% higher annually than it is under a clean sweep or a universal reign. The possibility of a Republican clean sweep is really negligible. Does not look like any path to them taking the House. They could retain the Senate and the presidency, but taking the House would be, the math does not appear to be there. This is the biggest concern probably for the back half of the year, which is something to say when you think about what's going on in the actual world. But the likelihood of a period of uncertainty. Does anyone remember the famous hanging chads? So when Bush and Gore presidential election, we went 43 days without a clear winner of the election. Why might that happen again? Well, first and foremost, the virus is going to cause an unprecedented number of mail-in votes. I know I got my little card the other day offering me to send in my, to apply to do a mail-in vote. I personally haven't decided, for the record. But one of the things that makes the math interesting is that right now, for example, there appears to be a surge of people looking to push Senator Biden higher, and it appears that he is in the lead right now. However, in a recent poll, 40% of Democrats said they were concerned about going to the polls in person. Only 6% of Republicans said that. So it could be that that actually sways voter turnout, and that could change the election. So those are big things to be thinking about. And why is that such a big risk? Well, markets hate uncertainty. We want to know who the next president is so that we know what the policies might be, so that we know how to invest. So I think that would be a big concern. It's also that civil unrest is likely to be really high during that period. I think the country right now is so divided that no matter who wins, the other side is likely to be quite upset about it. And that will, again, probably cause headlines that aren't friendly to the market. And lastly, on Sunday, President Trump in an interview did admit that he refused to confirm that he would accept the results of the election. He didn't say he wouldn't, but he said that he would say neither yes nor no at that moment. So, that would be a concern and a likelihood that should Senator Biden be declared the winner, there could be a challenge in courts. I honestly think it would go if President Trump were announced the winner, there's a good chance that could be challenged as well. So likely to be some real uncertainty in November. How might politics impact policy? Because this helps you think about how do I want to be invested for the future. So here's some issues on taxes. We talked about Democrats likely to repeal the 2018 tax cuts. A Republican, in other words, President Trump winning again, we would he's likely to seek a payroll tax cut for corporations. And if the economy is still struggling, I would say that that is a likely item that they could pass. On the finance side, Democrats are likely to look for more homeowner protections, so keeping people from getting evicted in this difficult time. They would likely undo the regulatory rollbacks, instituting more government, bigger government, and they'd likely enforce some things. I think that enforcement has been a little lax under the current administration. Republicans, they would likely, not only likely, they've already started, they would relax Dodd-Frank. So the bill that put restrictions on banks after the 2008 financial crisis that constrained their ability to trade, to speculate. It was announced just 3 weeks ago that there already were moves in that direction, and some of the rules were being relaxed for the giant banks after they've passed their stress tests. So it's one of the, it's not the reason we like the banking sector or the finance sector, but I can tell you it is a reason why we like the bank sector. One of the others is its reasonable valuation. So certainly something to be thinking about. Trade, likely under a Democrat, they would cut what we consider fair deals, whereas under the Republicans, we're cutting more America First deals. So in other words, again, more cooperation, more globalization. Under a Democrat, you might see the Trans-Pacific Pipeline come back, and you're likely to see fewer tariffs. Under the Republican administration, more supply coming from the United States. So again, for better or worse, making America great, reducing the concerns we saw over the supply chain back in March, and just continued incentive to bring business home here to the United States. Surprisingly, the deficits is where you really see a non-traditional Republican agenda right now. Under the last administration of the Democrats, which obviously Senator Biden was vice president for, from 2009 to 2016, the deficits in this country rose by $8.6 trillion. Under the Republicans, in just 4 years, we've already risen by $8.3 trillion, and there's a current stimulus package being discussed right now, which rocks up another trillion. So I guess we're going to try to break the record. China, in many respects, there's some consistent feeling that they need to be confronted for some of their unfair practices, whether it's with their currencies, whether it's with their technology, a number of different things. Under a Democratic administration, it's likely we would confront them with our allies. So again, that global cooperation and talking. If we were under a Republican administration, it's likely that we confront them on our own. This next one is one that I think is very important from an investing standpoint, and one that I think is a universal bipartisan issue: infrastructure. I think no matter what, the United States is going to spend money on infrastructure. There was a bipartisan bill talked about. I think if it weren't an election year, it would already be in place. But we don't want to give too much help to the economy, apparently, in an election year, and I get that for both sides. So the Democrats, you would likely see significant money spent, as well as some particularly green incentives to solar, to wind, to whatever that is, to enhance the energy grid here in the United States. Republicans, you're just going to see money. So I don't know where it's going to be, roads, bridges, whatever. Again, trying to get jobs at a time when we'll likely still have 10 or 12 million unemployed in this country. So there's going to be money put behind infrastructure. And then the other universal thing that I think people aren't thinking enough about is antitrust and big tech. I think both the Democratic and a Republican administration might go after the big techs and look to restrain them, tie that down, tighten up a little bit in the tech area. So that's certainly something that, as the tech stocks have clearly been leading the market higher over the last 3 months, I think that's a concern that people need to be starting to focus on. Investing in 2020. So here's Warren Buffett's 2 rules of investing. Rule number 1, never lose money. And rule number 2, don't forget rule number 1. That's one of my favorites. So what does that mean now, and how do I take advantage of it? Well, I think the first thing it means now is the world has changed a lot since March, certainly in the financial side of the world. And we do have uncertainty coming here in the fall. Doesn't mean the market can't go up through it, but markets historically hate uncertainty. and we're going to go into a very uncertain period. So if you are sitting back more comfortable, relieved, and were stressed out in March, taking a second look at that portfolio and saying, maybe I should rebalance that. Maybe big tech could be targeted. My tech overweight is more than I'm comfortable with. Let's reduce some of that. I agree. Infrastructure is likely to be money spent under either administration. Let's go ahead and rebalance to maybe some infrastructure plays. I think those are a couple things that universally we can say. Now, if you want to start thinking about, Republicans might win, maybe it's defense that you're looking at more strongly. Democrats might win. Maybe it's more international because there's going to be more international partnerships. So those are certainly things to be thinking about. But again, to Warren Buffett's point there, if you are more comfortable now, if you're mostly relieved in the fact of being better off now than you were back in March, then maybe doing some rebalancing would be a very good idea. If you never looked at it in March and you're like, I'm 30 years old and I'm not retiring for 40 years, then, riding the wave is perfectly fine too. Timing the market is extremely difficult and not something we're looking to do. So that is what I had for today. I think I kept you more or less right to our time. We've got a couple minutes left here. But in the meantime, my name is Dave Clayman. My contact info is there on the screen. Feel free to email me, call me, anything we can do to help. So I think that this is one of the more interesting years we've ever had in markets. To the point I made earlier, I was joking with someone on a call in the last hour when I said in January, everyone was saying, oh my gosh, 2019 was such a great year in markets. Why didn't we own more stocks? In February, nobody talked, but in March, it became, oh my gosh, why do you own any stocks? What were you thinking? And then April through July, it's been, why didn't we own more stocks? So I have a feeling we may have a change in mood again, but not riding that emotional roller coaster, keeping a steady eye out on your long-term goals, that's really the key to success. But hopefully we gave you some things to think about today as we roll into the end of 2020 and a change in control, whatever way it should go. So it could be a change in presidency, it could be a change in the Senate, it could be no change and status quo, but there's certainly decisions to be made and some things to think about. So hopefully we did that. Hopefully we provided you with some info. And again, if you have any further questions, please don't hesitate to reach out to me, and we can have a deeper, more personal conversation. Thanks very much, and I hope everybody is healthy and well, and enjoy your summer. Thanks very much. Take care.